Good morning, traders. Welcome to Beyond Profile. Today is Tuesday, and it is March 8th. We're looking at the Euro market here this morning after its recent run-up. Last week, you could see where we had taken off from these lows down at 38.35, had blasted higher into those 140s. Looking at the monthly profile right here, you'll notice there's a big pocket, this blue hologram, if you will. Shows this void, if you will, from 39.35s back down to 38.72s, and what they're trying to do here is they're trying to backfill some of this into this area here this morning, and watching to see how far they're actually going to come back to. If you look at, you had some prior pivot highs back from 38.80s. There was a prior pivot high here at 38.90. You can see you get a little bit of a bounce off of that. But how much of this are we going to retrace back into this? There's two key areas that I would be looking at: 38.72s. For actually a responsive buy off of that level there, back up into 39.30s or so. But you can see the divot, like I said, in here, is they're going to continue to work on this and build this out. We said that last week, that at some point we would come back through here and go back and forth and fill this in, because we went up too cleanly, and the structure wise we need to come back through these areas and fill this in. So as of right now, we're coming down. We're working our way down into that area. Will we get all the way down to 38.72? If so, we will look for responsive trades off of that area, because that being that last high volume area on the chart from this prior balance area that we had here before we did take off out of that area, because this was balanced trade right here, and there was an acceptance of it. So that naked point of control right here at 38.72s on the daily would be a key reference area for us on the way back down. So that's the euro today. So interesting development. We ran higher, we hit the 40 level. Now we're coming back, looking for the first retest back against this prior value area. They're flirting around right now with the whole number. We got slightly below it here, just short term. What was the low so far? 38.90s. They're still trying to trade around this 3900. You can see the volume node building out here at 39s. It may be a matter of them building this out without us ever getting back down to 38.72, but that would be, for me, a responsive long trade off of 38.72s if we got down to that level on the euro this morning. All right, so that's the euro market. And let's look at the S&P market here. Very volatile. Last week and a half now in these markets. Yesterday the Nasdaq had almost, I think we counted up, it was way over 100-point range from the time we went from the 70s down all the way to the lows and then back up on the bounce. You can see on the ES here that we are starting to build some sort of a balance here. We were talking about this as a matter of fact last week. Let me grab the daily chart here real quick. Looking at the S&P daily chart here, you can see we're starting to build some signs of balance here, and again, it's a huge balance area from what we're used to here in the market. Very volatile. You could draw some lines here. There's almost a wedge formation building here, and this contractional phase is getting tighter and tighter. You can see pre-market here, we ran back to the 17, 18s again, which is, again, that's been a pivotal area. We gapped up over it last week. We held, we ran higher. Yesterday we came all the way back through it, filled this gap. And it's just in a big old consolidation phase, if you will, or contraction, as this thing is looking to make a move either up and out or down and out. Yeah, one or the other. The question is which way. And again, this, unfortunately, this range is so big. It's 1332s all the way back down to, really, we could say 1295s, 1300s. It's a 30-point balance area that's starting to build, and we're going across it within a matter of a day to 2 days here, which is making things very, very volatile. And again, all you have to do is look at the VIX and you can see why that is. So with that being said, when we're looking at it on an intraday basis here, what have we done in the overnight? You can see we rallied back to the 17 area. We've got this big volume node so far building at the 1308 area. That was a reference point yesterday because we went through it, came back to it, and then we took off again. So 1308's right now short-term area of support for the S&P short-term. Whether or not it holds, like I said, it looks like just a big old wedge formation. So what we really want to focus in on is those extreme levels on the daily chart of, unfair lows, unfair highs, and we're going to have to play off of it. Whenever it does break, whichever direction it decides it wants to go in, that will be the direction that we're going to want to play in for sure. All right. So keep that in mind as this big old consolidation phase gets ready to make a move, because we know balance will always lead to an imbalanced state. This one's just a little bit larger than most that we've seen, in weeks really. I mean, because you go back and you look at every one of these balance areas that we've seen where the market consolidated for a while. This is big. This is, again, really volatile up here. Volatility is definitely coming back into the S&P. There's no denying that fact. So, okay, traders, have a good trading day, and we'll see you in the room.